Thanks everyone for joining us. Today we're going to talk a little bit about the markets, specifically interest rates. A lot has happened in the last couple months since our last update, and we've been getting a lot of questions about where things are headed, what's the economy looking like, and so forth. So let's dive in a little bit on that, guys. Any thoughts on, let's talk about interest rates?
Yeah, Tom, do you want to kick us off?
Sure. I mean, obviously, in the last week or so, we've gotten inclinations that the Federal Reserve is about to lower interest rates at their next September meeting, which was pretty much anticipated. The bond market, interestingly enough, talking about the U.S. Treasury market, has already anticipated that, so we've seen some lowering of rates overall, and actually it's happened over in some overseas markets as well. So the anticipation of the interest rate increase has already been mostly factored into the Treasury market at this point. So I'm not a lot of surprise with regard to that. But I will say that generally speaking, for this interest rate cycle, we believe we've seen the peaks in terms of interest rates. Now, does that mean we're going back down to 2 or 1 on the Treasury markets and mortgage rates? Probably not. But again, we believe we've seen the peak in terms of this interest rate cycle move.
Yeah, and I think it brings up an interesting conversation, right? Because we started the year with some anticipation around, 5 or 6 potential rate cuts,
Yeah,
right? And obviously, as the year has gone on, that's decreased, and now we're looking, some people still say 2 or 3 rate cuts. We are probably leaning on the lower end of that, where it might be 1 or 2. I think it's, all but a foregone conclusion, like you're saying, that we're going to see one in September. It's probably going to be a quarter point from stuff we're seeing, but I think those expectations have also been interesting to watch, and how the market is pricing that into all the volatility that's kind of been happening, and just how that's continued to decrease as the year has gone on, as we head towards the election.
yeah, exactly. And go ahead, Matt. I'm sorry.
No, go ahead.
No, I mean, and I think again we have to realize that this is a coordinated move for the most part, right? It's not just easing rates in the U.S. markets, but we're seeing the same thing happening in most developed markets as well with
Right.
regard to interest rates. So.
Yeah, I just kind of add to Zach's point. I think the expectations throughout the year have probably changed in almost just as many months, up, down, sideways, and so forth. But I think when you pair what we're seeing with interest rates with some of the economic data points, some things are starting to roll over. Some of the points in the economy look like they're slowing a little bit. But generally speaking, the economy's actually been doing okay for the most part. So going back to Tom, your point earlier, it's hard to make the argument that rates really need to drop off significantly to kick off growth, because growth, although it's slowed, has actually been okay. And so maybe we just kind of muddle through this. Maybe rates start to normalize here in the next few months. I think that makes sense. But, we're certainly not going to jump on the prediction bandwagon and try and determine exactly where this is going. But the point I think here is the markets have priced in some rate cuts. The markets have priced in some slowness, and we tend to agree with that.
Right, exactly.
Yeah, it'll be an interesting thing to watch over the next 6 to 12 months, especially once we do get past the election and that cycle is kind of over. We understand what we're going to have in the Oval Office at that point. To kick off 2025, earnings from some of those Mag 7 companies as well, I'm sure will be a thing to watch with interest rates. It's going to be interesting to watch over the next little bit, but like you said, we're not going to jump on any bandwagons in terms of predictions, because it's just a lot of unknowns right now. And a lot of factors that could play into really which direction things could go.
Yeah, and I agree. And I think the main thing to remember is that it's a slight decrease in interest rates, but there's a reason they're lowering rates. It's to try to bring it back to parity, so to speak, right? Because we are seeing some signs of slowing in the economy.
Right.
Labor markets have slowed. Economy is starting to slow. The growth rate is starting to slow. Now, again, is it recessionary? No, not at this point. But those are data issues that we watch very closely. But remember, they're lowering rates to again, because they're seeing some signs in the economy of things slowly. So we're watching that very closely.
That soft landing seems like it could potentially be on the table. I know that was talked about a lot when this hiking cycle first began too. That'll be interesting to watch as well, because I think when that first started too, people didn't really think soft landing was even a possibility. It was either like crash and burn the economy, or inflation was going to run rampant, and there wasn't a whole lot of middle ground that people saw, I think. It seems like we're getting closer and closer to that idea of a soft landing too, which obviously would be the ideal situation and outcome.
Yeah, I would agree with that. And I would just throw in as well, even though we're not trying to put a stamp or a number on where the interest rates are going to land or what exactly the market's going to do, because at the end of the day, nobody can perfectly predict that. But I wouldn't take that as a reason not to be proactive. right? Make sure your strategy's on track. Make sure your investments are in the right pockets and right areas, which is a lot of what we're doing right now. It's a good time to be proactive. Do a checkup on how things are doing and make sure you're in the right areas. One, to make sure you're not in too risky of a position, but also to make sure you're taking advantage of some of the dislocations that have happened in the markets. I think it's a good time to do that for folks and investors.
Absolutely.
Agreed.
Yeah. Well, guys, thanks for joining us today. I think this was a great quick market update. Hopefully you found this insightful on where things are going with interest rates, and appreciate you joining us. We'll see you next time.